Welcome to Eye Level to High Level, where real talk meets real results. I'm Jimmy Rios, and each week we break down the mindset, money moves, and strategies you need to elevate your life and business. Let's level up. Welcome to the Eye Level to High Level podcast. This is Jimmy Rios. I'm your host, and I can't stop. We built this program, Eye Level to High Level, to take you to another stratosphere, right? From the norm, from the basic. We talk about building financial freedom in your life. And for some, they think, well, I'm just going to work, until I can retire. And then the mindset of that is that you get to retirement age and maybe you get sick and now you can't go and enjoy that time that you thought you were going to have a life. I'm here today with Tony and Derrick for our part two of a great show that we started about 3 weeks ago on their show. And it correlated very nicely with what I've been trying to talk about, how we take ourselves from a level of complacency to a higher level. And to get to a higher level, you got to dive into the trenches and you got to do the work. There's education involved. There's mentorship involved. There's work involved. Listen to what I just said. Work. Yes, it's not easy. It's not get rich quick. It's really taking a leap of faith in concepts, ideas, thought processes, different things that are going to elevate you. And maybe it's going to involve taking risks, getting rid of the fear, being uncomfortable, getting rid of the comfortable to be uncomfortable, right? So you can form a pathway. And Tony and Derrick have Pico's trading desk. They built a community of education to teach people other ways to be able to elevate their financial status in the world of trading and demystify a lot of the things that people worry about when talking about trading. What is trading? What are all the different things you can do? How can we do that? I want to talk a little bit today about some of the way that traders can scale, protect their capital, and operate like professionals. But we're going to move from understanding the market to operating at a high level. And to do that, I wanted Tony and Derrick to talk about a little bit about why is risk management more important than profits? Tell us a little bit about that, because in what you do, there's a lot of management in that.
Yeah, you should always know the risks. Risk is like the main thing we focus on. We always focus on risk. Anytime we're looking at a mine or any company, we always focus on the risk. We always, like, for example, a mining company's in Mexico right now. You got to worry about the geopolitical risk going on with Trump and like the cartels over there, because for all you know, a cartel could come over, take over these mines, and then now you're out your money, and you don't know how the company's going to do with that. They've already had stuff like that happen over there. They've had cartels take over like oil companies over there.
McEwen Mining.
Yeah, McEwen Mining. So you got to be always aware of the risks that are involved in these mining companies and then the cyber companies and any company you get into.
Yeah. And when you guys talk about mining companies in the U.S.,
For the most part.
yeah,
But
but are you guys open-minded to world in being able to geographically look at things on a bigger spectrum than just the U.S.? I know the U.S. is grand, but I know there's a lot of things in other parts of the world. How do you guys go about deciphering through things like that?
I believe China is going to be the next dominant hegemon for the next 100 years, especially in terms of energy. They outproduce every country. They have dark factories. They mass produce, or they export deflation because of their overproduction of goods, which is good for the middle class. It makes things more affordable. Then we put a tariff on it and make them have to pay that tariff to get the cheaper good and penalize them for not buying American, but nothing's American. In terms of global stratospheric views, I think the West is entering a debt spiral that's
Mm,
uncontrollable. You can see that with Germany. They're deindustrializing at a rapid pace. They hit the brick wall. France is hitting the wall. UK is hitting the wall. The US is hitting the wall. Every Western country is hitting the wall due to hyper debt. And
right,
people need to understand in this hyper debt cycle, you need hard assets. And the East is where the assets are flowing to. You can look at JP Morgan. They just moved their trading desk to Singapore.
right.
All the gold and hard assets and everything is moving to the east. Energy production is moving to the east. China is building new coal plants, new nuclear plants. And we in the West, we're stuck in the 1970s, 1960s. And in
Yeah,
order to truly understand the dynamics of what's going on, we just look at the solar cycles.
yeah,
And, that'll give you the juxtaposition of where we are truly at. And you always want to be global in your mindset because we are a global world and we are more global than ever. We have the internet. So, in that, we should look elsewhere for opportunities in emerging markets. Like Vietnam is going to be a great market. Nigeria is going to be a great market. India, in due time, will be a great market as well. It's developing. Infosys is a great company. We like it. We're waiting for the right target, but we will get in it soon.
yeah.
Yeah.
I was an underwriter for Infosys out of India, and I learned a lot. And I did a lot of deep diving in. Whenever I go into anything, right, I go into deep dive of educating myself, and this is why it opened up like a whole new pathway of my mind when I started talking to you guys. In your community, you got people coming in, and how would you define a bad trade versus a bad trader? I mean, let's talk about that because there's going to be people coming in that have maybe bad habits, right? In what they thought was the right way to do things. How do you guys change that around into thinking the Pico's way?
Well, a bad trader will be somebody who doesn't do their own due diligence, doesn't like look at the risk, doesn't check out the jurisdictions that you're in, because jurisdiction is everything when it comes to any company, because it could change, right? And then you got to look for like if they're going to have any mergers and stuff like that, M&As. So yeah, you want to check everything out because yeah, you can end up being a bad trader by just not being open-minded, like we talked about earlier, not, just doing your own due diligence, not seeking help if you need help to learn more about this company, to understand this company more. And a bad trade, that can happen at any time. We've made some bad trades recently, actually, with one helium company that we purchased. We thought it was going to be a winner, and it turned out to be a loser. So you can always end up in a bad trade, but you should not let that discourage you, and you should just, dust yourself off and try again because if you keep letting that discourage you, you're not going to want to do it anymore and you're going to pull out. And there's always bad trades, but that one good trade can make up for that bad trade.
Right.
And most of the time it does.
Yeah.
Like he said, we made a bad trade with a company in the helium space. We didn't lose too much, but lost enough money. You don't have to ride the wave all the way down. Just because you're in the red doesn't mean you have to hold it because you think it's going to recover and you want to lose less. If it's in a downward trajectory, look at the 200 day. The 200-day sloping down, get out. It ain't coming back. Not for a while. It
Right.
needs some momentous move to make it go back up. A bad trader is just somebody who listens to Jim Cramer and like people like that, talking heads on the media telling you to buy these blue chips because they're going to go to $1 million. You're going to be rich and retire your family. That ain't going to happen. That's a bad trader. A bad trade, it doesn't have to be a bad trade. You may be early. We bought Molina. It went up the first week after we bought it, and then it went down below where we bought it at. And you know what? We were just early.
Yeah.
Like, or we were late, depending on how you look at it, because I think healthcare will have its day in the sun again. And,
Right.
it's
What
just
rules?
really
What rules should every trader have before entering a trade?
don't marry your trade. Never marry your
Emotional.
trade.
Emotional.
Yeah.
Right.
And always do the due diligence. That comes down to everything. You always have to
Yeah.
do due diligence. Always
Is
ask
there a
questions.
point? Is there a point? Let's say you've done your due diligence. Is there a point where you're kind of like ready to jump in, and then you kind of hold yourself back? Have you guys come across situations like that, or have you guys done enough due diligence where you jump in? It's time. How do you know that?
If,
How do you decipher when is the right time to jump in?
if you're feeling uncertain about something, the best course of action oftentimes is to do nothing. You need that clarity. So sit back
Okay.
and watch the charts. Look at the 3 months chart. And if that 3 month chart doesn't give you the answer you're looking for, then it's probably not the company for you.
Right.
You should be able to look at these things with fluidity and study them and analyze them, and then look at their balance sheet. The balance sheet will tell you everything, and then you should look at the balance sheet velocity. You should understand how the capex is flowing and all that. What's their debt? What's their debt to equity? And if that still doesn't tell you it, then it's not the right company for you. You can't have room for uncertainty. If you're going to invest in a stock, you need to be ready to commit to that stock, or you can't do it. It'll mess with your head too much, and you won't feel comfortable, and you'll just be miserable.
And
And
always make sure you set a price target, because the price target's everything. We always set a price target to buy in, and then we
yeah,
set a price target where we want to sell out. Because a lot of people don't do that. They just jump in after they feel the stock's good. They just jump in and they don't even set a price target at all. Where we wait for a company like there's one right now we're waiting for, which is Sentinel One, and we're waiting for it to drop below like $13, and it's at $16, $17 right now, and it keeps going up. So it might not ever hit that price target. So sometimes you're gonna miss out on a trade because it's not hitting your price target. But if you don't feel comfortable jumping in, there's no reason to do it because then it can become a bad trade.
right. What what's your guys' take with AI in the marketplace? How do you guys use AI to your advantage?
So we actually have 17 economic models now. It's bizarre. And our latest model actually incorporates, strategies that were taught to us by BlackRock.
Hmm.
And, we use that to analyze these companies and analyze the movement in the companies, especially in terms of their cash flow, their cash on hand, their debt. It really makes it a lot easier for us to analyze it. And then we go into it personally and we look at where everything's flowing, how much inventory they have on supply, um, how much insider ownership it is, because insider ownership is critical. Like with Nvidia, they only have like a 2% insider ownership now. I don't like that. That's not very bullish to me. Share
Yeah,
dilution's another thing we worry about, like Netflix. I don't like Netflix. I would never recommend anybody to buy it because they just diluted the hell out of their shares, and I see more downside because they have to ingest all that share dilution. When you have to ingest it, there's a digestion period and there's a lag effect. That'll naturally draw the stock down. Sure, you
right.
can get in at like $79, but you have to wait and set a price target to really understand where you get it. And the people who are going to get hurt the most are the ones who bought in at this diluted price and they think it's going to just zoom up because of XYZ, when really it's got to digest those excess shares, and people are taking profits.
Yeah, and another way to use AI is to like just pretty much ask Grok or ChatGPT about like different companies in different sectors,
Hmm.
Anthropic AI too.
and it'll give you a list, and then you have to go and do your due diligence, read on this company, look at the financials. If it's a mining company, you want to see the grams per ton, the hectares they have, things like that. And if it's a software company or whatever, you want to do research into that. If you don't understand it, then you need to learn a little bit about what you're investing in before you can even like do your due diligence on this company. So it
Right.
just takes a lot of like reading, but you can use AI and all that to, give you companies. Not all of them are going to be good. We've had some that we've gotten from Grok or ChatGPT that they've given us because you can't always know all the companies, so you need help to
Yeah.
find some. So that's a perfect way to use it and to utilize it to, give you companies that you can go and research yourself.
Now, tell us the difference between trading for income and trading for wealth.
Well, when you're trading for wealth, you're looking at it with a strategy. When you're trading for income, you're just kind of like a chicken with your head cut off. You're just running and hoping that you hit, and you're desperate. The trade for
Yeah.
wealth is just to be calm
Strategy.
about it, to
Right.
have a strategy, have a rhythm to it. It's like the story of Plato and the Ascendant. I tell you to resurrect this rabbit. You tell me you are a master and you can. You do everything in the book to resurrect the rabbit, but the rabbit doesn't resurrect. Little
Hmm.
did you know I induced the rabbit into a coma, and all you need to do is give him this leaf to bring him back to life. It's that patience that leads you to being able to bring it to you instead
Right.
of just charging at it, believing you know all. It's
Right.
not going to work.
Yeah, and like also like you should look into like different assets for wealth that like hold their value, like gold and silver, because you can use those as a bank to take loans off from yourself and things like that. Otherwise, if you're just trading for income, you're going to be, like you said, passive aggressive. You're going to start investing in things that you shouldn't invest in, and you're going to try to get rich quick, and it's not going to happen. So it's better to look at the assets that hold value, that are not too volatile. Although gold and silver can be volatile, they're not as volatile as some other stocks or cryptocurrencies, because a lot of people mess with like meme coins thinking they're going to get rich fast with that.
Right.
and also like doing this what is this poly market trade, like poly market
Mm.
stuff, things
Oh,
like
Yeah.
Kalishi and Polymarket, yeah.
yeah, that's
Yeah.
another big risk because you never know.
Yeah. Tell us about gold, gold, silver. What's your take on how to invest in that? If I'm sitting on the side listening, and there's all this, we already know that the U.S. economy and the debt is ridiculous. Ever since they, took us off the gold standard, right, in 1971, it's just been ridiculous. So there's been a lot of talk, and gold has gone up, obviously, a lot recently, right? So for somebody wanting to jump into that world in asset classification and exploring that, what are your guys' tips on that and how somebody can jump in? Obviously, you can't go to Walmart and go pick up a bar of gold, right? So how would you guys do it if somebody had X amount of money and they wanted to, instead of having it, devalue and keep losing because of inflation, how do you go into gold?
Well, you want to first find a reputable dealer. So you want to make sure that you got a dealer that's good, that like, is certified and they're a reputable dealer. And then you want to also know like how much you have to spend on gold, how much you have to spend on silver. Because if you only have a little bit, then you want to look at buying like little grams, or maybe you want to focus on copper. We actually have copper, which a lot of people laugh at us about that. But we believe copper is going to be a good thing to buy. So we also buy copper, the actual silver, the copper rounds.
Mm-hmm.
And if you're going to buy silver and gold, we would recommend not to buy like jewelry because the jewelry is not the same as the coins.
Right.
And if you are buying jewelry, you want to get like the 24 karat jewelry because if anything less than 24 karat is not true gold. And like the best thing to do for gold would be, I mean, gold's like what, 4,300 right now. So you're going to
Mm-hmm.
Mm-hmm.
pay like $4,800 for one coin, 1 ounce of coin.
Right.
So if you can't afford that, try to buy the grams instead of buying the full ounce. And then I think it's like 18 grams that equals full ounce of silver, I mean gold. So that's what you could do. Also, they have like these gold backs that you can purchase. You can buy those at like some dealers. Some dealers have them, some shops have them, and those are good too. And those come in $1. Those cost like $8. So you would just buy that slowly and just keep adding to it. Maybe doing like every 2 weeks you purchase it, set like a goal that you want to buy either silver or gold every 2 weeks and just do that.
I
What
think the word
about
you're looking
Tony?
for.
Have you had Tony any experience with Pax Gold? The obviously digital token in investing in that world of digital currency that uses gold as their, I guess, way to store the gold through digitized formats. Have you had any experience in that world?
No, we haven't done the gold-backed stablecoins yet, or where you deposit your gold and you're allowed to buy from it. I do
Right,
know of those services, and that is one way. You could buy gold through a broker and you can spend it. There's Pax Gold, there's Battle Bank.
right,
There's several different, resources. And that's a good option.
yeah,
But the best option for gold is to always have physical gold on you, and even silver
right,
can be considered fractional gold, and platinum. You always want to
Yeah.
think of the market and how big it is. Like platinum's a small market, so it'll have big moves up, big moves down. But gold
right,
is kind of slow and steady, and that's the tortoise. And for those people who want gold, they should look at the digital one. I think that's a smart idea if you really feel that you have no place to store. Let's say you live in a single wide trailer in like
right,
Mobile, Alabama. You might want to go the digital gold route.
yeah.
You have no real place to store it.
But see, this is what
But
I'm talking about. It is opening up minds of thinking, right? Because as we're having this conversation, right, in this community, there's others that are listening that didn't even think that they could, right? Now there's possibilities. Now they can go and start researching, go back and listen to this podcast and start looking these things up. Go tell us, who is Pico's trading desk for? Tell us who your ideal person is for you guys.
So I guess we'd say that we're more for the working class. That's who we are. We're
Yes.
working men. So I guess we'd be more for the working class. Although we also have people there,
high net worth
high net worth that
Yeah.
we talk with also that we try to help out
daily.
because they like to hear our thoughts also because we come from like the working class. Like I said, I work in a warehouse. So I talk with these people all day long that are like regular people like
Right.
us that They don't have any gold, they don't have any silver. And what they're looking for is to get rich quick, exactly what we've been talking about. The things that have put them in the hole. And they also live off of debt a lot, like they trade in their cars a lot. Like I think on our podcast that we told you about that our parents, they were like that. They traded in cars like every year,
Yeah,
basically. I think in his 33 years of life, we
They had
counted
32
32
cars.
cars. So like, and that's not within the 33 years, that's like within the 28 years of his life.
right,
And that's just like, like just focusing on things, always trying to keep up with the Joneses.
right.
So I think we're more like for those people that are trying to like, get themselves out of the hole because that's what I got myself into also when
Sure,
I was married, me and my ex. That's why we pretty much, I think that's why our marriage ended was
right.
because we were in
A
debt.
lot of marriages end because of money, the lack of a proper approach to money and how to go about it, right? Because it's you start taking on debt. Debt for debt is not good, and we leverage in ways that bring assets to our fold that we make that money work for us. So everything that I do is thinking of how I'm going to make this turn into an asset in some form or format, right? Even my cars, right? When I'm buying a car, I'm thinking how can I use and put this to make money, right? And be it tax wise, and I put it under my business and get write offs through the vehicle through my business, or hire my kids to drive one of their vehicles and put a couple of signs on there and pay them $14,000 a year so they can write that off, and now I can offset some of the insurance because they're 17, right? But it's paying myself back because I'm thinking smarter on how to use that depreciating asset to become an asset, right? And that's just different techniques. When someone comes to you and they say I want to join, what do they get?
Well, I do agree with you. Debt is an asset, and it's something you have to learn how to use. And
Right.
leverage is dangerous to play with, but once you understand leverage and how to really maneuver and do swings, it's uphill. It's an uphill battle. But in terms of what they get from us, they get community guidance if they need it. We're very easy to access. They get articles they can read. We always can make time, well, I can, to talk to anybody about trading, about charts, about what the market looks like, what we see. We want to be a place where people can look to for, optimism, even if we're bearish, because we are considered outlaws. And we are for the outlaws. We are for those who know that there's something wrong with this country. There's something wrong with this government. There's something wrong with our money, and they want to be free. We're for those people who want to be free and
I
want
love it.
to grow. And that's what you get with us. You get this undying passion and this rage to want to create something beautiful, something magic to help the working man finally get their due and what's
Yes.
owed to them.
And I love
and
that, Derek. Even though I can't wait to get you off the golden handcuffs, what I call a job, right? I mean, the reality is we've developed passions in what we do to be able to help others and make a living and find our freedoms, right, inside of what we do.
yeah.
Trading is not only a way to get possibly a second income stream, it can be a capital acceleration tool. It can complement your real estate and your business funding. But how should entrepreneurs think about trading differently than gamblers?
You
You
can
want
take
me to
that
take
out.
that one?
Yeah.
Well, I think an entrepreneur, if he's going to do trading, the best way to do it, he needs to have an LLC first and
Yes.
foremost. You need to be knowing the tax laws and know what you can write down and how to
Right.
truly go into Articles of Confederation. You know, and if you're a gambler, well, you just buy shit coins, and just piss your money away. Like not financial advice, but just do what you do best. You piss your money away. Go bet on the Knicks winning the NBA championship. There you go. That's a sound strategy. But for the investors, this is a long game. You need patience. You need to have an article of establishment organization. You need to have an LLC. This gives you tax incentives. This helps you really keep a lot of your money to yourself. And there's
Right.
ways you can write down your losses, realize them at the end of the year. It helps you out if you are doing bad in trading. And if you're good at trading, don't do too much And if you do something, make sure you have a reputable charity to donate to, and other ways to write off, your winnings. Whether that be, having kids to pay, that's a good strategy.
I'm always thinking outside the box, man. These kids aren't going to be kids forever, and they need to learn. And so I use it as a learning tool myself because, these kids are, they're at that stage in life where they're trying to figure things out, and they're very entrepreneurial minded. Both my twins and my daughter are thinking in those realms, even though I don't know yet what path each is going to take, even though I have a good idea of where they're going. I know that when they listen to these shows and they hear me on social media, their friends are talking about their dad, right? Because they're tuning in. We make it very normal to talk about things, and that's why we open it up. This part of the show, now that we're going to be rolling into the last bit, is our rapid fire. So each one of you is going to give me a quick answer on these three. So the first one rule every trader must follow. Tony, go.
Discipline.
Yeah, do your due diligence. Always check jurisdictions, risks.
Love it. One mistake to avoid at all costs.
Marrying your trade.
Love it.
Don't be trying to, do the get rich quick scheme. Always be patient.
Love it. One habit that separates winners.
Read every day. Read everything. Do not dilute yourself. Do not dismiss anything. Read everything, even if it's something completely incoherent. Read it because it may have some truth in there.
Wow.
And be willing to ask questions and reach out to others. You could say that like some of these people on the podcast that maybe you reach out to them, maybe they won't respond, but you won't know unless you do it. So if you have a question for them, the best thing to do is to reach out for them, and maybe they can help you learn and help you be a better investor and better at what you're doing.
Yeah, even a CEO, reach out to them. Sometimes they're very accessible and they'll talk to you.
Yeah.
You guys, these are gems all around, and you guys have been, we're going to continue on a private note, because there's a lot of things that I want to invite you guys to do with me and meet my partners and open up our pathways to further learning and higher level. I want everybody to listen to where you guys say on how can we reach you guys? What is the best way to become part of your community? Give us that.
So we have a website at the moment, which we're not going to be renewing that, but you can check us out on Substack at Pico's Trading Desk. We also have our podcast on YouTube. You can also find it on Spotify, on Apple Podcasts. You can reach out to
What's the name of the
email,
podcast?
Pico's Trading Desk.
Perfect. So
And we always have our
guys,
email and everything on there. We're very accessible.
it's all
You
on
can reach
there.
out to
Yeah,
us.
I've been checking it out. I've been diving in. This is what I talk about, guys. Trading doesn't take you high level. Discipline does. And when you work with us, when you work with people that are in this realm, we're very patient. We want to work with you. We want to help you. I'm going to my rich dads, right? These guys, even though they're younger, they're knowledgeable in an area that excites me, right? Do the same in your life. Don't let nothing hold you back. Right? This is another avenue that can help you in many ways. But if it's not for you, that's okay. What I'm saying is don't get complacent in life. Don't let things just go day by day. Nothing's happening. Challenge yourself to better yourself 1%. 1% is a very fractionalized little bit. But let me tell you, compounded over time, it becomes wonders what you'll do and what you'll live and what you'll see. And work with others, help others. This is the epitome of love and everything that we talk about, the law of reciprocity in coming around and helping yourself by helping others. You guys, it's been a pleasure. I can't wait to carry this on offline, and a lot of good things I got to talk to you guys about. Everybody out there, thank you for tuning in to the Eye Level to High Level podcast. We'll talk to you soon. On the flip side, take care. Thanks for tuning in to Eye Level to High Level. If you're ready to rise above the average, subscribe, share, and follow us for more ways to take your grind to greatness. Until next time, keep pushing higher.